What's up, everyone? I'm Nick Campo. This is
Big Boss Ben.
Big Boss Ben, and we are the Lone Guys podcast coming to you live from NBI Financial Group. This is the Campo Media Group Studios. Welcome, welcome, welcome. We're glad to have you back.
Absolutely.
Oh, wait, and if you haven't done it yet, go ahead and bang that red subscribe button on our YouTube channel and turn on the notifications. We are NBI Financial Group on all of them. If you're on Facebook, make sure you follow us, but hop over to our YouTube as well, because if you leave a comment and subscribe to our YouTube and turn on those notifications, leave a comment on what you think about this video. If you like this video, if you hate this video, if you hate me, if you love Ben, let us know. And if you leave your Instagram handle so we know that who you are, guess what? We are giving away a $100 Amazon gift card on St. Patty's Day.
Help keep everyone employed.
Keep everyone employed, especially with these mass layoffs in the industry.
I know. Well, multiple industries. Yeah.
So what do we got today, Benny boy?
Let's start off
Boss
with
Ben.
It's been a wild week in the mortgage industry. There's a lot of headlines out there. So we're going to do some rapid fire first. See if you have any thoughts on them.
Boom, boom.
First off, big news. Matt Ishbia wasted no time after taking over the Suns.
I am so glad that you brought this up. So we've been season ticket holders of the Charlotte Hornets for a long time. Since
they were the Bobcats.
Yeah, since we started working at Quicken Loans, which is not now Rocket Mortgage.
Yep.
We were we got our tickets, buy one season, get one free. They were the Bobcats. They were bad.
It was what?
They were so bad.
13, 14 season?
Something like that. I'd have to look it up. It was a while ago. So anyways, I wish that our owner, Michael Jordan, would act a little bit more like Matt Ishbia and go all in to win. And was this a slap in the face to Dan Gilbert and the Cleveland Cavs?
2 days after he got ownership, he went out there and got Kevin Durant.
And he did he stayed up all night, apparently. I read this story. So he stayed up all night and made the phone call to his GM and said, get the deal done. I don't care what it takes. Get the deal done.
He knows what he wants.
So the West is going to be freaking tough.
It is. I mean, they were already loaded. But Devin Booker, now Kevin Durant. Come on.
What's that? Well, DeAndre Ayton too,
right.
They're beast. Chris Paul.
Yeah.
So here's the deal. What's that say about the mortgage industry? We just breed a bunch of winners. And I think it's because
we do.
It's a high pressure industry. So what does pressure do?
Makes you better.
It makes diamonds, right?
And it makes you competitive.
Extremely competitive.
You know what I would bet?
What?
Watch the Cavaliers the next couple of years. Dan Gilbert is not going to sit still, especially now that UWM is out there.
I don't think that Dan Gilbert can sit still. I think he's got to go after it. He has to go after players. He has to pay some players. He has to get a superstar. He has to draft better. And I think he knows that. I mean, and the Cavs aren't terrible.
No, they're not.
They're not terrible. Donovan Mitchell's over there now, and he's playing pretty well for him. I think that they need to go get some winners. You need a bona fide superstar like Devin Booker, Chris Paul, Kevin Durant, DeAndre Ayton. How are you going to, you ain't beating that.
I am. We've said this ever since we found out about Ishbia buying the Suns. We are excited for this rivalry because it's going to be fun to watch.
For our mortgage industry people, are you watching? Are you paying attention to the NBA now? Because Dan Gilbert versus Matt Ishbia, I think that all mortgage people need to pay attention to that.
They are.
It'll be fun, even if you don't watch every time they play each other. It'll be fun, and hopefully Dan Gilbert. I don't know, he had that health issue where he had the stroke, and hopefully he's starting to recover even more than he was last time I saw him speak publicly. I'm hoping he gets his fastball back.
Yeah, I mean, he seemed to be doing better, but I mean, it's I'm with you. I mean, and I think he will. I think he has it back, so I'm expecting to see that here very soon. The Cavs start to make some.
Well,
some
I
moves.
want the public comments. They hate each other.
Oh, they cannot stand each other.
So I want the public comments. I'm all about it.
Stand each other.
So what else we got going on in the mortgage industry?
I mean, speaking of Rocket UWM, so Rocket's out there, they're now paying penalties at UWM for suing brokers that try to work with both.
So they're paying the penalties.
They are paying. Yeah, they are saying we will pay if UWM comes after you. We will pay all expenses.
All expenses, huh? But what they don't fix is the fact that
UWM will cut them off and you still can't work with both.
You can't work with both. We have to be able to work with both. Plain and simple. That's my biggest gripe. Hey, United Wholesale Mortgage, I need to be able to work with both of these lenders. They're both good lenders. I know y'all don't like each other. But we need somebody who can rival UWM in case pricing goes crazy. What happens then? And for the brokers or better crowd, I hear you. UWM is the best. They're the best that we've worked with.
That's why we work with them.
But what happens if one day pricing shoots through the roof.
Right.
Right. Like the reason we're mortgage brokers is because we have more control than if we work for a lender. We have more control. This put us into a box. So what I think needs to happen is I think a big mortgage broker needs to file a lawsuit. And hopefully the American justice system believes in free competition and says, hey, this is an unlawful contract.
Right.
We're not doing it because we aren't willing to give up that relationship.
Exactly.
But
because they are the best. I mean, we want to work with them. But as of right now, but you're right. Like what? And we've preached this for how long on this show? Competition makes everyone better.
100%. Competition, pressure, stress, all of that makes everybody better.
The advantage and why we are better as brokers is because we've had that competition. We can freely shop. We make lenders out there who are competitive for our clients' business. That's how we beat them in pricing and fees, everything. That's how we offer a better experience.
And every day in and day out, what do? We beat retail lenders. We beat them on closing costs. We beat them on pricing. We beat them plain and simple.
It's because
we're better to work for. We're better to do business with. We're better to get your mortgage through. We're quicker, 15 and a half days on non-new construction. New construction takes a little bit longer because it takes longer to build, right?
Like, and we think that's slow. We're trying to improve on that.
Oh, we are. We got big things planned.
We do. Massive things planned.
Huge things planned.
Massive things
We are going very, very, very far in this industry, and you're either with us or you're against us. There's no in between for me.
Yeah. I mean, we are. I mean, it's massive. Like some of the things we're doing, I mean, and we keep saying it, is competition makes it better.
Competition.
And that's my issue. I agree with you. My biggest gripe with UWM, I love them. I've loved working with them. But my biggest gripe is the fact that they put that restriction in place. The whole point of being a broker is that freedom of competition, something we can provide that has made us better because of it.
How many brokers right now do you think are still complaining about UWM?
In terms of what? In terms of that contract?
In terms of saying you can't work with certain lenders.
Not as many as that probably used to. They are offering so many things, and they have their new title piece. They're now doing construction.
They're the best in the business.
They are, but the way that they're structuring, they're trying to get people relying upon them, and it's working, and it's because they're so good at it. But once that happens, and that's my biggest concern out of all this, is being overly reliant on it. And you're right, like they're going to raise prices, right? They raise their pricing up, or if they do, I'm not saying they will. I don't know what they have planned, but if they do, what is that going to do for the broker channel? Because you've become overly reliant upon them. You've ran out all these other lenders potentially. I mean, we're seeing people go out of business left and right nowadays. That could potentially hurt the broker channel. That's my biggest concern and my biggest gripe with UWM.
100%. But I will say this: everything that they've done so far, it seems as if they have really focused on speed, efficiency, and lowering the cost for the client.
Absolutely.
So it would be out of character based on their actions and what their actions typically have been for the past 3 months, 4 months, 6 months, a year to say, hey, they're going to jack up prices, right? I'm not saying that they're going to. I'm saying my biggest concern is, hey, we are so reliant on you and you are so good. But here's my other piece.
That's exactly what
Let's take this out of it. Hey, UWM, you have the choice to say you don't want to do business with us. Okay, I get it. If we do business with someone else, right?
Right.
Okay, I get it. Hopefully that never happens to us. But how about some other lenders step up? There's a huge gap to fill.
There's
right?
A massive one.
Like Home Point is somebody I think about nonstop. Like
they had that opportunity.
They still do. There's a massive gap. Like who is going to be number two? Who is going to be your diversity in the industry from a standpoint for the broker to go and shop around with, right? I think that Home Point Financial, right? Home Point, they're wholesale only. So you have the same claim that UWM does. So you're going to have brokers who like you. Get your technology where it needs to be. If you want to turn around your earnings reports, because I've been watching those earnings reports, they aren't great. They've laid off a bunch of people. You have a massive opportunity to put processes and efficiencies in place to fill a massive need in the industry. And here's the other piece, because that need is typically filled by Quicken or Rocket Mortgage, right? Well, guess what? I can't go do business with Rocket Mortgage because I don't want to lose the opportunity to do business with UWM. UWM just rolled out another new product, a new construction loan, ground up construction, right? That is already better than what Flagstar has, what Go Mortgage has, like from a ease of use.
Yes.
It's already better.
Because of the technology.
Because of the technology and the efficiency and the speed, right?
There's plenty of lenders out there with great people that we enjoy working with. I'm thinking like Cardinal. I mean, there's a bunch of them. But the technology is really what is setting.
Well, it makes it simple.
Rocket and UWM apart.
Well, it makes it so simple too, because at the end of the day, guess what? We are able to get things done quickly and more smoothly for our realtor partners and for our clients. And we get it done better than the retail side can do. The technology that UWM has is the best in the industry, period. I'm not talking wholesale. I'm not talking direct to consumer. I'm not talking retail, big banks, whoever you want to talk to, credit unions, builders, lenders. We are the best in the industry from a technology standpoint because of UWM. Right. And they've inspired us as mortgage brokers to get the best in the industry on our technology. Absolutely. And we are probably 2 to 3 weeks away from rolling out the best technology any broker company has ever had.
We are. Our goal is to have better technology than the UWMs, to be the best out there in the mortgage side of things.
Right. From a broker standpoint, though, because we are not going to a lender.
Right. Like, no, we're not. In our Absolutely plans. No. But we are going to be geared up and have the technology and capacity
to be able to do.
Right. As much as pretty much lenders do, but we are doing it from the broker channel because that is where we see the benefit to our clients.
And on top of that.
And our realtor partners, everyone.
Because if we wanted to get greedy, we would turn into a retail lender.
Absolutely.
And we're just not going to do that. We go correspondent. Like that's if you're getting greedy and you want to pack but that's why we beat on a price standpoint. So my bet is this. We will beat on a price standpoint, have better technology, and have bigger margins because we implemented better technology, so we don't have to be greedy. We can still help the consumer, but we'll still do well ourselves, right?
Right.
It's all about helping the consumer, and if we can do that through technology, that would be absolutely awesome.
Absolutely. Kind of still going on a tangent, but something else to that too, the technology. I mean, you mentioned the speed and efficiency. While that is absolutely massive, you also have to think about clarity to our clients. How many lenders out there that we struggle with trying to get a loan estimate that's going to be sent to our clients that we have no idea what's going to be on there?
Flagstar just did it to us. They sent out a new construction loan to one of our biggest realtor partners. We had no clue what was on it. They wouldn't let us see it beforehand. And guess what happened? It was incorrect. It was so far off. Right. It could have cost us the deal. Like
we had a HELOC went out with numbers that was the qualifying payment numbers, not their actual payment numbers, that freaked the client out with no explanation, no heads up to us. We didn't even get it.
Right.
It went to our clients first. And that is the technology piece that I'm saying, that aside for efficiency, I mean, that allows us to provide better service. And that's maybe even more important.
The service is the biggest piece to us.
Yeah.
Because they have to trust us, and we can't let you trust us if we don't have the service in place.
Absolutely.
So that's a huge part of it. That's a huge part of it. That's probably we just had a social media post go out, and we're all about service, efficiency, and speed.
Yes.
And I think I called it efficiency, experience, speed. EES. Efficiency, experience, speed. Great efficiency, great experience, great speed. And if you can do that and you provide it at a less of a cost than everyone else, which we do.
Yeah.
Why wouldn't you do business with NBI Financial Group?
Absolutely.
Why wouldn't you want to work? If you're a loan officer, like this is the best place to work. If you're a loan officer assistant, you're not finding a situation that's better than this, especially once the technology is in place.
You're not. And I mean, we talk about how reliant you're going to be on you. That the way that we have set up here, we do not need to be reliant upon anyone. Now, having a partner, a lender partner who is going to be on top of their things and we can rely on and trust, that is massive. And that's going to mean a lot to us, but we're not sitting back saying, okay, well, we're just going to rely on them for everything. We are doing more ourselves because of it, because we have that ability to do more. We're the underwriting upfront piece. I mean, who else out there does that? You're going to have a more thorough pre-qualification than anyone else out there. I mean, you talk about the movement mortgages, they do a little bit of it. I mean, they do, because they focused on purchases, which was smart for years.
They were the first ones. They pushed Rocket Mortgage. They pushed Rocket Mortgage and tried to force Rocket Mortgage's hand. right?
Absolutely.
And they forced Rocket Mortgage to adjust. Do you remember when Movement first came into the scene and kind of blew up?
Absolutely.
And they were like, oh my God, they're closing purchases in 15 days. And our leaders at the time walked around to the floor and talked to every team, and every meeting was about how do we get more efficient? How do we get better? How do we get better? The competition pushed the industry forward. Rocket was the next one. We were Quicken Loans back then, but Rocket was the next one. And then UWM came out, and just the technology just blew everything else away.
It does, but what we're doing is taking it even further. Like, I mean, we're having lender-made software that is being built specifically for us, for the broker channel, to do more that we, as much as we can up front for our clients, to make sure that once we get that purchase application, it is the smoothest, easiest, quickest transaction of any transaction out there.
And we hear that nonstop.
Right.
This is so easy. You're so much easier than, you're so much more responsive. Well, we're more responsive because we have more time, because we built the efficiencies into our process. Now we're still learning our process, and we're still adjusting our process, and we're still building on it day in and day out every single day. But we took the opportunity to build these efficiencies in and to build out our process to the point where at the end of the day, we're going to be the most advanced from a technological standpoint on the broker channel. And you partner with somebody, and to all of our partners, like I've talked about Home Point, I've talked about Flagstar, I've talked about, so far in this episode, in the past, I've talked about EPM. Like, we appreciate all of our partnerships. Every single one of our partnerships that we have with a wholesale lender, thank you. We appreciate it.
Absolutely.
I will say this. A lot of our partners and a lot of us, we talk, right? And our account executives will talk to us. And the number one piece of feedback and information that I have for our account executives is bring your technology forward. Yes. I want to say thank you to UWM, because your technology is where we need it to be so that we can move super quickly. We are still closing loans in 20, 21 days at other lenders, but we could cut that down and cut that in half if our lender partners would pick up the technology piece and figure out, how do I compete against the UWM technology-wise? Now, the question is that what they want? Is that the segment of the market they're going for?
I mean, yeah, that's because, I mean, you're right. There's a lot of great lender partners out there that we have, that great people that I would love to bring more business to, that I do think want to help our clients, but they just don't have the technology in place. And at the end of the day, that's what matters. It's creating the best experience for our clients and doing it in a way that's efficient for us to still provide great experience for our clients, even on the front end, the things that we have a more manual, hands-on process with.
Yeah, and I'm with you 1,000%. With that being said, if you haven't done it yet, go ahead and bang that red subscribe button, turn on notifications. We are the Loan Guys, NBI Financial Group. You can find us on all our social media platforms. We are the Loan Guy. We are NBI Financial Group on everything. We are the Loan Guys podcast, but you will find the Loan Guys on all of NBI Financial Group's pages. We are on Twitter, Instagram, Facebook, LinkedIn, TikTok, and YouTube, Rumble. We're on everything. Also, bang the red subscribe button, turn on the notifications, and leave a comment on this video. If you like this video and you leave a comment about something in this conversation that you really appreciated, or something that you disliked, or whether or not you think Ben's hair is too gray, whatever it is, right? Leave a comment.
Blame this guy.
Leave a comment with your Instagram handle, and we will enter you in to our raffle that is happening on March 17th, St. Paddy's Day, where we're giving away a $100 Amazon gift card. Go ahead, rock and roll. Listen, Amazon just laid off 18,000 employers. We're going to do our part to try to get the employees, not employer, 18,000 employees. We're doing our part to try to get them their jobs back. $100 Amazon gift card. All you have to do is subscribe. Bang the red subscribe button, subscribe, turn on notifications, comment on this video or any of our videos with a comment about the video itself and your Instagram handle. And Ben, back to you in the studios.
All right, in other news, do you know Domo Technologies big in the title side of things?
Not much.
So they're big on title insurance. They've actually partnered. They're in an anti-fraud thing with Payments.io. You know who that is?
Yes.
Shout out to Jason Doshi.
Woo, Doshi.
That's a big partnership. And I mean, we've
Jason
worked with
Doshi emailed me. He's trying to get me on the podcast with somebody. He loves our content. Shout out, Jason. I really appreciate it.
Absolutely.
Thank you for thinking of me.
We've worked with Doshi for a long time.
Love him. Great guy.
Back when we first started.
Yeah.
I mean, that's something I think is going to be a long way. I think the title side of things is in for a big overhaul coming up. You're seeing a lot of things. I mean, we talked about UWM having that side of it. You're seeing a lot from the technology standpoint and the anti-fraud standpoint on that. So I'm just something to look out for. I think that could be.
That's going to be huge. That's going to be awesome. Congrats to Jason. I hope he backed that Brinks truck up and got that bag.
And what I think that's going to end up doing too is lower costs, because I think that will create a lot of technologies out there are going to make that more safer and more efficient. Which will lower costs.
Wait, hold on. So competition,
it does,
breeds efficiencies, which breeds less of a cost to the consumer.
That's big. Yeah,
that's huge.
That is
huge. I love it. And I'm super happy for Jason Doshi. Great guy. Worked with him. We've worked with him. He's worked with all of us, and he's just an awesome dude. And yeah.
So Loan Depot, their chairman,
they called me.
Their chairman of the board, Anthony Heisch, probably saying that wrong, but has stepped down.
Why?
Discrepancy with other board members over appointment of a new board of director member.
So what was the discrepancy?
Basically, he wanted someone and no one else agreed to it, but he has a 40% ownership and he has proxy votes for another 17%.
So he's majority.
So he has 57%. He said he sent out a letter to all shareholders saying, and here I will read off the quote.
So essentially, the guy who is the majority owner of the company, he has 40 votes. He's on the board, plus another 17%, 40% of the vote, plus 17% of the proxy vote. He has final say.
Yes. He said, I ought to engage with the board members with other areas before reaching out to you, but there has been no appetite for meaningful discussions. And he appointed this guy as the majority owner. So he basically said, you know what? I have the ability to do this because I started this company. I still have 57% of the votes. I'm going to make this decision because we have spent a couple months and gotten nowhere. I don't see the issue with it.
So what happened?
He ended up stepping down because the rest of the board members raised hell about him the way he did it. So he ended up stepping down as he's still on the board, but he stepped down as executive chairman. But he still owns he still has 57% of the voting rights. So I don't.
So couldn't he just vote the rest of the board off and replace him?
He probably could.
You want my opinion on this? Because I think it's more complicated than just mortgage.
Yes, and I know you have some thoughts, and this is your opportunity to speak to that if you want to.
We've had an exciting day here.
We have.
I will say this. I'm the majority owner of this business. You own a portion of it. We don't have nearly as many employees as Loan Depot.
Right.
I've been critical of Better.com and their CEO, but I also understand like there's a huge respect factor. So what I say on this show, if it's critical, understand it comes from a place of respect. Better.com, not so much because of how they treated their employees, and I would not do that to our employees.
Yeah.
Well, if you ask different people, you have disgruntled. Maybe they took something you said the wrong way. Whatever, right? So, anyways, long story short, I will say it's lonely at the top. What do I mean about that? I've been reading a lot about this, and I've been reading a lot of CEOs' opinions. CEOs of big companies, small businesses. Like businesses have a chief executive officer, all of them. Whether they have that title or not, if there's a business, there's somebody who's making the decisions, and they have to make the decisions that are best for the business, for the longevity of the business. There's a massive responsibility, right? So I have a responsibility to every single one of my employees to make sure every decision that I'm making is the best decision, because I would hate one of my decisions, especially as we're a younger company, to put us out of business. Now, we're not at a risk for that, but it's something that I think about all the time, and I think that's why I'm on my toes, right? I'm constantly on my toes. I'm saying be proactive, not reactive. How do we do this? How do we do that? That type of thing. Because I think about the Donovans of the world who's running this podcast. I think about our former loan officer assistant. I think about our former employees who actually worked with us. And I'm making every decision based on the longevity of the business, right? And at the same time, you're asking people to do their jobs.
Yes.
All you have to do is show up and do your job, right? And that means, and what do I mean by that? Does that mean show up and do the bare minimum? No, in a business this size, it does not. Bigger companies, you may be able to get away with it, right? But I want you to show up and do your job. But it's lonely at the top when you're the founder of a business and you're growing your business and you're making the tough decisions, especially earlier on. But I'm sure in his situation, Loan Depot is massive.
Yeah.
It's probably even tougher, right?
Oh, I'm
and
sure.
he's made a decision to pull his wholesale channel this year.
Yep.
Now he's making a decision where he wants a new person who on the board, and the board doesn't agree with him. Let me ask you a question. Who's sitting on the board with him? Did they make the tough decisions to get him to that point? I doubt it.
I don't know. I mean, it's pretty wild. The fact that he has 57% and they got to the point he had to step down. Like, what in the world?
But did he really step down? Now, you also want people who are willing to disagree with you,
Yes.
right? You want people who are willing to bring you information. That you want people who are willing to give you feedback, because you need some friction in any business in order to get better, right? So we had a cool event that happened here today. Not really cool, that's sarcasm. But we had an employee quit because they didn't like tough feedback, right? So at the end of the day, it's like, okay, we needed that friction, and that person leaving our company is going to move us forward exponentially. And
Yes.
we've already had conversations with other people within our business. Okay, how do we replace this person? Do we replace this person? Like, what do we do, right? We've already had other conversations.
Yes. We have.
So we are now going to move forward and be more efficient. And now we're knowing what we're looking for in the role, right?
Right.
Hopefully we can bring a person in where the conversations aren't as tough and we don't have to ask for the same things over and over and over and over to get done and do multiple trainings and so on and so forth, right? Because the last thing you want as a person who's running a business and trying to expand the business, and you and I have had conversations between ourselves about this, and if you're okay, let's talk about it, right? Like personal,
yeah.
like between us, like our personal production in the company. Are you okay with talking about some of this so that
Yeah.
people don't think I'm signaling out one person? So as an owner of the business, you have job responsibility. I have job responsibility. It's my job to go above and beyond,
Yes.
right?
Right.
Now, that doesn't mean work more hours than you're supposed to, but that means like, hey, sometimes I need to dig in and figure things out. I don't want to micromanage. I've told you this a million times. I've told Donovan this a million times. I don't want to micromanage. I've told everybody that in the company. If I feel like I'm having to micromanage and things aren't getting done unless I'm involved, that's a problem. That you can't grow a business that way. You just can't. So like when it comes to the social media and the going live, I said, I'm going to hire this person who hopefully knows more about this than me, because I know nothing about it. Like, and look at the setup. Like, just take a quick gander. Like,
look at the first couple of podcasts. Go back, rewatch the first couple of podcasts, and then look at where we are now.
Credit to Donovan, and hopefully our following starts getting up, because, you know, I'm very proud of what he's done, and there has been some friction between him and I, because I see things a certain way. He sees them, but guess what? When he pushes back, and the friction isn't a bad thing. When he pushes back, I'm like, okay, well, maybe I need to reevaluate what we're doing. And I think one of the big pieces was content. We need more content. So we were creating more content, and we were just having a conversation prior, because we want to be video based. And now we want to add, because we've created more content, we're able to say, okay, now we want to get more informational. We talk a lot about the current going ons of the mortgage industry, but guess who I want to talk to? I want to talk to the first time home buyer.
Absolutely.
Hey, first time home buyer, this is your year. This is your year. So we're creating content for over the next 3 to 4 months that we're going to be talking to the first-time home buyer, telling them all the misconceptions in the industry, telling them that, hey, you don't actually need to have 2 years of job experience. There's other situations. You can have 1 year of job experience, and we can get you into a home and buy a home. And the younger you do it, the national average for first-time home buyers age is ticking up. I want to bring that, and I want to be the moving factor and force to move that age down, because buying real estate in America is the number one way to build wealth for the working class.
And this is something we'll talk about more, but later in the podcast. But it's the way that the mortgage industry going is making it more and more a push to get more first-time home buyers.
I think that needs to happen.
I mean, it is happening. Everyone's trying it. I mean, even the FHFA, everyone's trying to get more first-time home buyers. Our job as mortgage loan originators is to educate to teach them and explain to them what is going on. We're not just a transactional based person of, oh, here's your loan, give me these documents, see you have a nice life. Our job is to explain to our clients and to our realtor partners and explain to them the basis of what we do, what exactly we need, explain to them the why behind everything, as well as work with them on a plan for their personal situation that sets them up for their future goals, not just this one transaction. That's how we base this business off of, and that is what we're going to do. And this video segment that's coming up is going to be a big part of that.
Well, and I agree with you on that. And let's switch back to the CEO. It's lonely on top, right? So when I say, hey, we need our employees to go above and beyond, we don't need to be micromanaging. I have to have the time to be able to trust you to in your role, to do your role without me constantly having to follow up.
Yes.
If I'm following up with you, that's a problem. And I've said a million times, we are going to have the Navy SEALs of mortgage companies. I want people who are hungry. Donovan, you know what I want? I want wolves. I want people who are willing to go out and hunt. I want cheetahs. I want fighters. I want people who aren't going to just, oh, Nick got mad at me. He raised his voice. Do I yell? I don't yell at people, but I'm a very passionate person. I'm an Italian. I'm a New Yorker. I'm a very passionate person. So if you're not doing your job and I'm constantly having conversations with you about, hey, we need to step this up after training after training after training, like this might not be for you. And then if we have one tough conversation and you quit, this definitely isn't for you. So thank you for doing us a favor.
Yeah.
Because what do I want? I want wolves. I want cheetahs. I want monsters. You and I talked about this, Ben.
We did.
I want monsters. What's that mean? Do I want bad people? No. But guess what? Sometimes you have to have some very, very, very people who are willing to go to bad places for the good of humanity.
So we've talked about this a lot lately, and that's the whole Jordan Peterson reference.
Love Jordan.
Yep. So there's rabbits versus monsters, right? It's can you actually be a good rabbit, because they're harmless. They have no ability to do anything bad. They don't even make the choice.
Good rabbit.
Right, exactly. Now, if you're a monster, guess what? That doesn't mean you're necessarily a bad person. That just means that you have the ability to do that. But you are making the conscious choice to make good decisions, and it comes down to the ability to support and make those decisions versus just being there.
And I'll say this too, right?
Like,
so we're talking about wanting monsters, and I 100% agree with you. And I think that, Ben, I got to give you a shout out. You're one of my projects, right? That's not a bad thing. One of the brightest people I've been around. But we needed to get the ability and the willingness to kind of stand up for certain actions.
Right.
And you've addressed it. And that's where you got this Jordan Peterson monster thing. And that's why I took the monsters from you. Because I say wolves, cheetahs, what else hunts for things? Coyotes.
Like, it really
I
is
don't
a
want
good
coyotes, because coyotes are kind of like scavengers. Like, I want something that goes out there and like is hunting the predator, right? But anyways, like, it's a great analogy. And
right.
And I'm going to touch on this, like, because we're actively, like, if you're a loan officer, we'll bring you on. If you're somebody who I think is just a gangster at this mortgage industry, I'm going to bring you on.
Yeah.
I'm going to give you the opportunity. Now, we're all a team.
Right.
And the team picks up the team. And as soon as you think that you're more important than the team, or as soon as you aren't picking up your slack and helping the team, like, I'm going to use Donovan's in the room with us, so that's why I keep using Donovan. Donovan, for example, he doesn't have any direct influence on the process of a mortgage, but he has a direct influence on how much business we're bringing in, how much recognition we're getting. We're reading, as a sales team, we're reading Fanatical Prospecting.
We are.
What's one of the things they talk about? It's easier to get business if you're recognized and you have brand awareness. Donovan is our brand awareness. So if he stopped doing his job, then we have less brand awareness, which makes everybody else's jobs harder, which makes everybody else help less people, makes everybody else not be able to get as many first-time home buyers into homes, makes everybody else not to be able to get that person to cash out to pay for their daughter's wedding so they don't have to go into super debt, makes everybody else not make as much commission money, right? Makes possibly puts the business in the situation to where you have to lay people off because you're not bringing enough business. Now, is that going to happen? No, Donovan's doing a great job, but that's just an example. Same thing that you and I talk about, right? So we had an issue with somebody who's just not doing their portion. How many hours did it cost you?
Oh, like one day, 11.
11 hours in one day. It cost you 11 hours in one day. So that was a conversation. And then what's the next thing happened? If we get everything that we were supposed to get, it would have cost you probably 60 hours total.
Right.
It cost the clients. Our clients didn't have a bad experience. They didn't see this. This is internal. I call these growing pains or growing warts. You want to know what you do with a wart? You take some dry ice, you stick it on that damn wart, and that wart goes away. And I'm watching Donovan cringe over there. It's a nasty example, but it's true. So what you have to do in this situation, right? And with this person, great person, think they're an awesome person. have to have a tough conversation, which we had. Then have to have another tough conversation when the next ball is dropped. And then because guess what? There's a responsibility to doing your job, right? Yeah. And so at the end of the day, here's how I look at everything. When that happens and then you come to give a 2-week notice, you were never cut out for this business.
No.
Weak.
No.
You're not a monster. You're not a wolf. You're not a cheetah. And every person in their job has to be a wolf, a cheetah, a monster. And here's the other piece about it. Maybe this isn't for you. And I'm not talking directly about this person. So if they're watching, it's not directly about you. This is just in general what I am looking for in this business. You have to have some pride and some self-worth, even if you're doing the shittiest job in the world. Like I'm talking about, I mean, think of the worst thing. Like, here's my personality. If I was doing the work, say I'm shoveling shit out of horses' stalls. Just pretend that's what I'm doing. That's probably pretty terrible, right? I'm going to be the best damn shit shoveler in America. Like, that's what I want. But that's because I want to show that I'm doing, I am doing a awesome job when it comes to building the business, when it comes to doing whatever I am. That's pride, that's self-worth. That is just that's just what we need, right? Plain and simple. And if you do that, you will have long-term success in life. And if you have to put that effort into everything, even if you don't like what you're doing, but you also have to be honest about it as well, right? Don't sit there and act like you love what you're doing so much. Be honest about it. Whoever you're working with, be honest about it, right? So at the end of the day, like if you aren't putting the effort in and then you come to give a 2-week notice because you didn't like the type of conversation that you had to have, I'm going to say sayonara.
Right.
Because we were probably going to have to cross this bridge at some point anyways.
I mean, with that reaction to it, absolutely. Like it was just a matter of time.
Well, and that's with anyone who does that, right? Yeah. So you have to understand, like, does that make things tough? Yeah. Do you want to have to do that? No. You want, like, for me personally, and here's where the loneliness comes in. So I was talking about, I'm making decisions for this entire industry, for this entire business, and every person that's in this business. I want Donovan to be able to feed his family. I want Sarah to be able to feed her family. I want you to feed your family, Linda to feed her family, me to be able to feed my family, right? Every person who is in this business, I want them to succeed. I want them to be successful. I want them to be the best, but I can't want it more than them. But where it becomes very lonely to me is I care and love everybody who works for me. I do. I care about everyone who works for me success. I have a deep respect, admiration, and love for them. And I see something in them that they sometimes don't see in themselves, like you, for example. And one of my biggest downfalls, and where I think it gets hard being a CEO and so on and so forth, is I care about you as the person, but I sometimes have to do things to push you a little bit farther that I even think about me like, this is hard. This is a tough conversation. It's tough telling somebody they're being lazy. It's tough telling somebody that they aren't living up to their potential. But I'm doing it because, Ben, I believed in you. And Donovan, when him and I have conversations, if it's a tough conversation, I'm not doing it to belittle. I'm not doing it to make you. I'm doing it because I believe and I care about you so much. But I truly see the talent. Like with Donovan, I'm going to use him because he's in the room. Like, look what he's done for our social channels. Do you see the growth that we've had? Great work, Donovan. But it's probably, if you asked him, it probably hasn't always been easy to work for me. And he said, right, like, we got to get him a mic. So I got another mic. We'll bring it next time. But it's not been easy. But I'm not doing it because I'm mad at Donovan or I'm upset with him as a person. I think he's a great person. I think if you talk to Donovan and you got to know him, he's a great fucking person. But I'm doing it because guess what? I believe in him. I believe he can be the best. And I believe this is where it starts. And I believe we can grow this thing to where he never leaves. Maybe he does. And if he does, guess what? I'm going to put my arm around him like, great job. You did what you're supposed to do. You grew this thing. And now I'm a proud coat. Hey, maybe he's a CEO too. And now I have somebody that I can confide in from a CEO level because they tell you, listen, as long as he is employed by NBI Financial Group, as much respect as I have for him, I don't expect him to tell me the truly every thought that he's thinking, right? So there's a disconnect there between the CEO. Like, what am I getting at? Like, Donovan gives me feedback from a work standpoint and so on and so forth. And I think that there's a respect level between the two of us, and I fucking appreciate it. But the one thing to me that I always question, and maybe this is a personal thing, is are they telling you everything? Because at the end of the day, like, I'm sending the paycheck to the bank account, right? And some people might be nervous, and I'm not saying Donovan specifically, I'm just saying people in general might be nervous to bring you everything because they're afraid that you might fire them. I wouldn't do that. I want everything so that I have all the information so I can make the decision, right?
The best decision. Well, yeah.
But if your effort isn't there, it's going to be a rough road working here. That's why I say we're going to have Navy SEALs of mortgage, because we're going to have the expectation of, here's the bar. The next person is going to come and push the bar here. Linda, how much higher has she pushed the bar because of how she's crushing it?
A ton
higher. And now I'm pushing harder, and I'm pushing you harder too. Come on, dude. And then now I'm pushing. I just asked Donovan 3 questions before we came in here. When can we get all of our socials, personal socials, on top of the business popping? Like, I want them all popping, like blowing up, like, because that's
through all platforms, like,
and he's getting there, and we're building the processes out, and it takes time. The other piece is I'm not patient.
So go
ahead.
I'm going to add something too, and something one of our friends sent to me about another analogy. I love analogies. About running into the storm, about the versus bulls versus cows, or what is it? Buffalo versus
cows.
Buffalo versus cows. So a cow will run away from the storm. What's going to happen when the storm catches up? It's going to be worse. A buffalo will run directly into the storm. They will run right through it. They will face what's coming and run right through it.
Warriors.
But what ends up happening? They get through it quicker, and then they're done with it. And they're better because of it.
Right.
Meanwhile, the cow is running with it, gets beaten, battered because they are running away from it the whole time and spend longer in it. And I do believe, like, that's part of why you bring it to that, is because you see some sort of issue and you address it immediately. And even if it comes off as aggressively, whatever, you are addressing it and fixing that. But the other party has to acknowledge it and has to say, okay, I'm going to do this with you. We will fix this together as a team.
I think that's where it becomes.
But if the other person's running away, it's going to be even worse.
Right.
And that's essentially is what is happening. And so you have to, and that's something we all have to work on too, is because it's human nature to be defensive. It just is. But you have to think about it and say what really matters and fight it back and say, I'm going to look at myself. I'm going to focus on my own self-improvement, and I'm going to take this as positive feedback and grow from it and improve not only myself, because guess what? You're going to become more of a monster, like I said. And once you have the monster, you will have the power and ability to help others and help those near you. I'm not going to run from it and be a scared little rabbit.
Or a scared cow.
Right. Or a scared cow.
One of the things I'll say too is, like, and I had this conversation, and I have this conversation constantly. And I wish Donovan had a mic today, because I think that you have a ton of experience in this. Am I hard to talk with?
Yes.
Why?
You are extremely direct. And we've talked about this morning with the way a lot of this country is going, a lot of people out there. And I'm not trying to get too political, but a lot of people, it's softer than it was.
That's not political.
15, 20 years ago. It is. It's truth. And a lot of people, and like I said, it's human nature to be defensive. And now everyone is protecting that feeling. And
it's all about feelings now.
Right. But you don't grow from it.
No.
You don't sit there and say, this is tough love. I'm going to look at this. I'm going to make this a positive and grow from it. I'm never going to let this happen again. I'm going to become a better person. And look, you're not going to get better overnight. Nothing's going to happen overnight. But if you don't take that and make the first step, what are you going to do?
Can I tell you a story about me personally, something that really shaped me? And in this instance, shout out Jeff Fleming. And I wasn't sure if I was going to use his name on this or not. He's big in the mortgage industry here. He's somebody I really respect. He got me into the mortgage industry, and we've talked about him in the past. But I have to say, shout out Jeff Fleming. I had a conversation with my dad today, and my dad gives a lot of great advice, but it's dad. You know what I'm saying? And he gives a lot of great advice, and my dad was extremely tough on us as kids. Like, not in a bad way though, like in a pushing us to be the best and hold us accountable. And so I have that in me from him, and I hold everybody accountable. I also believe that I'd be a bad CEO, I'd be a bad boss, and I'd be a bad friend. Kind of like the guy at Loan Depot. He probably feels a responsibility to put this guy on the board no matter what, even without the input, because he knows it's the best decision, right?
Right.
Well, for me, I'd be a bad friend, a bad employer, a bad CEO, a bad leader of a company if I was not willing to do what was best for the company all the time, and sometimes that means tough feedback, right? So I was having a conversation with my dad, and my dad said the same thing that you did. You and I had talked about it 4 hours earlier. He said, this world is getting soft. These people who are sometimes a little bit younger, it seems like they feel like they come out and they are owed or they deserve something. And that was one of the words that was used, deserve. You don't deserve anything, right? You have to earn it. Does that mean people should be harsh, cruel, or mean to you? No, it doesn't. I don't believe that. You have to earn it. You know why Donovan has his job? He reached out to me via email and said, hey, I'm going to school full time, but I'm going to be able to do this job. Here's what my resume is. I want this job. He came in and interviewed. He had the job before he walked in the door because out of everybody who applied, I'm talking hundreds of people who applied for his position, he went out and earned it by contacting me directly. And what happened is I then got it to Liz. We set up and then I hired, he'll have a microphone next week and he'll tell you this. I offered him the job before he walked out of the door.
Yeah.
Even if he knows nothing and there's been learning experiences, I believe by his actions, he was willing to work his butt off and earn the position. I didn't give a damn about anything else other than somebody wanting to be here and wanting to be the best. And by reaching out, that's what he showed me. Plain and simple. Do you know, I wish people would reach out and say, hey, I want a job doing that. Now, we have budgets, and if it's not an LO role, it's a lot harder for us to bring in a bunch of operations people. But what we were looking for on that job post and reaching out, there were several other people who did something as far as they would LinkedIn message me. He found my email and personally emailed me. The effort to do, he earned it. He didn't deserve it. He earned it. So when I heard I deserve was the first words, and I've told you this, if the first words out of your mouth are to say somebody else's name or to say something about you, you're probably starting the conversation on the wrong foot.
Yeah.
And I was just like, this isn't going to be a fit. I'm just like, this isn't going to work because, as soon as I hear I deserve, I don't deserve anything. You don't. Donovan doesn't. We have to earn it. What have you done for me lately? That's it. What have you done for me lately? And I've even told Donovan, hey, hold me accountable. If I'm supposed to be doing an article on TikTok or if I'm supposed to be, tell me when I'm not. Hold me accountable for my actions. Even if you think it's going to be and I know I need to be held accountable for a couple of days of actions. I wasn't feeling good, Donovan. I'm sorry. But, you get what I'm saying? So I think that it's very tough to be at the top because you're making the decisions, but you want people around you who want to be there. I've asked you 100 times, Ben, and how many times have I asked you, do you really want to be a part of it? Because there's a growing portion of owning a business.
For 10 months now, 9 months now.
I've stopped asking.
Yeah.
Have I stopped asking?
Yeah.
When was the last time I've said it?
About a month or so. I don't know.
It's probably been about a month and a half to 2 months because you started making drastic improvement in your everyday demeanor, production, just this podcast alone. Again, Donovan, how much better is he talking at this podcast? He said a long way. We got to get him a mic.
Yeah, we do.
But I have to see people trying. I don't give a damn if you don't. I don't give a damn if you make a mistake. But when I see you not trying, that's when I start getting frustrated. Like when you would say you would do stuff, and is it okay if we talk about this?
Sure.
You would say to me, hey, I'm going to knock out this process. I'll have it done by Wednesday. And then Friday rolls around. It's still not done. It wasn't frustrating to me that maybe the process would have been wrong. It was frustrating that you said that you would do it. There was no effort to get it done, and it just was not there. And we're 2 days past deadline. And then we would ask about it, and it wouldn't be there. You know what I'm saying? But then we resolved those issues, and we figured out, hey, what do we need to do to actually get this done? We brought in some person for help because you were overwhelmed, and you communicated that, and you've realized communication is key, and you have to wave the white flag. And also part of business and being a leader in business is delegating.
Absolutely.
Imagine if I was trying to do all the social media.
Yeah.
I wouldn't have time. Like, it's a full-time job. So it's just, you got to learn to delegate. It's a hard position being at the top. It's kind of lonely sometimes. Nobody understands, and nobody gives a fuck. Gives a crap, right? Nobody cares. Why would they care? What is that old saying? 80% of people don't care, and 20% of people are happy to see you going through it.
So I want to read a quote about you keep bringing up leadership and everything like that, and I think this is very fitting, and it helped me a ton. It says, great leaders are not the best at everything. They find people who are the best at different things and get them all on the same team.
Right.
That is leadership in the nutshell.
I agree 1,000%.
It's the communication of that. And that's something that I believe, like, personally has helped me a ton, is just putting out there, oh, we're a team. Like, I don't have to do it all on my back. That's not a team. That's a ball hog. Yes. But it's not even looking at it as a ball hog, but you ultimately are doing that. You're hurting everyone by trying to do too much because you're putting too much on your shoulders, saying, I want to be a leader, lead by example. I'm going to do way more than I have the capacity to do. Find a way to make it work, even though it's impossible to make work.
Right. And then you're hurting everybody else.
Yes.
So let me get back to the Jeff Fleming story. So I talked to my dad and he said, this world's getting soft, right? Jeff Fleming was one of my first leaders in the mortgage industry, and I didn't really like my first job in the mortgage industry. You all have to start somewhere. But I was a top producer in it.
Yeah.
You were on my team.
Yeah.
And I was showing up late. I would show up like 3 minutes late, 5 minutes late, 7 minutes late. One day I showed up at 9:01. And he called me out in front of the entire team and told me, I don't care if you're a top producer, you need to start showing up. And then he was really hard on me. Like, he was really hard on me, almost like a big brother. That's why I think I respect him so much. People ask me all the time, I'm like, he's like a big brother I never had. And I went to my dad and I was complaining. I was probably 23-ish, 24 at the time. Young, stupid, real stupid. 20-year-olds, you're dumb. Like, you don't know it. You'll recognize it in your 30s. But 20-year-olds,
you're never going to admit it.
You are dumb. You won't admit it today because you don't think you are. You think you know everything. You learn in your 20s, you make money in your 30s. That's my saying. For me, I was stupid and stubborn and hard-headed. Was I not?
Yeah.
Something had to change. And he held me accountable. I went to my dad and I was complaining. And my dad had the opportunity to let me off the hook. He could have let me off the hook. He could have been like, yeah, Jeff's being an ass. My dad knew Jeff as well. And he said, he's absolutely right. Start showing up to work on time. Wait, hold on. Somebody held me accountable? My parents held me accountable? That was great fathering, right? Like, you have an opportunity here. He gave you an opportunity. You might be the top producer. You're a leader because you are the top producer and you're showing up 5 minutes late. What are you doing? I remember I was mad at my dad for that. But he held me accountable, which he did his whole life. His whole life of raising me, he held me accountable no matter what it was. To this day, he still does, and we still butt heads at times. It is what it is. But it's a good thing to do. So, hey, you had somebody who cared enough to hold you accountable, but you deserve what now? Right? Like,
right.
You don't know what you walked out on.
No.
So it is hard being the CEO. It is hard being the top, but you are making decisions and you're trying to do what's best for people, even when they don't see it's what's best for them. How many conversations did you and I have? And you probably didn't recognize the first 8 months of this business, we'd have conversations.
Yeah.
And you probably didn't recognize, and I think you're starting to see some of it now.
Yeah. You really have to be you have to be a team, but you have to be the owner of your own work and yourself. And
CEO mindset.
Yes. And yeah, exactly. But, and it's also too, something else that I think you've said before is like, cause everyone always talks about work-life balance. There's no such thing as really work-life balance. Like it is balancing your life. It's all part of your life.
Explain that a little bit more, because the TikTok people are going to go nuts when Donovan cuts that. Because I know what you mean, but explain it more in depth like a kindergartner.
Right. So, I mean, because you need to, if you're making a change in your life, if you're doing self-improvement that is going to, maybe if it's primarily work related, it does not need to be just about your job. It needs to be on every part of your life. I mean, and the comparison is to a diet. You do a diet. It's not just, oh, I'm dieting real quick, I'm just going to do this. No, it's a lifestyle change. Like, people say that all the time, but it's true. If you're making a change to yourself, you need to have it apply to every aspect of your life. That's something that I've been big on focusing. I've always been terrible at organization, never really thinking it's that important, thinking that, if I just sit here and address any problem, work hard, smart, intelligent enough, I can make whatever work. That's not how life works.
You also thought you could bullshit your way out of stuff.
Pretty much.
That's the curse of the smart person, though.
But it's not. And you said, what'd you say the other night about organization? And I forget what you said, but anyways, it's not just being organized just about work. It's organizing every part of your life. It's like sitting down with your wife or your
Discipline
family.
is freedom.
Yes.
That's what I said.
Yes, that's exactly what you said. And he said, if you do that, if you have the discipline to do this up front, to set plans, to have things ready ahead of time and be proactive, then you are going to set up your life to be more free. You're going to have more time. You're going to be more successful. And that's why I'm saying about work-life balance. Like it's not about that. It's about changing who you are and how you handle things. It's about self-improvement.
Right, 100%. And here's the other thing that people don't recognize, and what I kind of started recognizing, I think at a younger age than a lot of other people. I was a screw up in college. You know, we went to college together. I didn't go to class. I failed classes. I almost got another kid kicked out of school. I had to right then learn to take personal responsibility for myself because it's something I asked somebody else to do. They were getting in trouble. I took personal responsibility, and I got that person off the hook. And then I had to face whatever the consequences were. Every decision you make, there's a consequence to that. We're messy. We're humans. It happens.
Yeah.
And it's hard to be. I'm a human too. Even though I'm a CEO of a company, I'm a human too. I have emotion. I have frustrations. Right. I have things that are driving me crazy. I have a wife. I have a kid. I have a family. I have everything everybody else has. We're human, right? I'm held to a higher standard, though, because I'm leading a company, and I have to know that, right?
Right.
But when it comes down to it is, how bad do you want to be successful? How bad do you want to be successful? Do you want to be successful super bad? Because if you do, then you're going to do what you need to do to be successful. If that means getting to work instead of, I was showing up at 9:03, 9:05, 9:07, 9:01 one day. If that means getting there at 8:55 or 8:45, right, that means be successful. If that means, hey, I have to sacrifice a little bit right now, but I see the end, there's going to be more freedom. If that means that, hey, I have to maybe listen to a Jordan Peterson who can give me the motivation. Or maybe that means for me, what it meant was I studied the greats, the people who are the best in the world at whatever it is they're doing, the Kobe Bryants in sports, the Patrick Bet Davids, I looked at a lot of Rogan stuff and people, oh, he's just dude, there comes a level of discipline. Jocko, from a leadership standpoint, there's a level of discipline that you have to have in order to be successful at anything, no matter what the industry is. I used to talk to our buddy Wes about this all the time. I would watch random sports or random things, or I would watch, I watch a lot of shows where they build stuff, like professional builders, and why? Because there's just something about greatness that I really enjoy, that I really want to watch, and I think that we can learn, and I want to ask that person questions, and I haven't had the chance to do that, but there's just something about greatness that is just so awesome. Oh man, Pele in soccer, or, I used to watch Venus Williams play tennis.
Right.
I don't know I couldn't keep score in tennis if you asked me, but it's there was just something there. Michael Jordan, Kobe Bryant, the best of the best, not LeBron, but Kobe and Michael, and for all you LeBron fans. But you get what I'm saying? So how bad do you want it, right? And are you willing to work a little bit extra to make it happen? Are you willing? There's certain things you have to be willing to do. And if you are willing to do those things to be the best, it will work out. It will work out, even if it doesn't work out there. But if you blaming, you ain't changing. Right. Which means bye. So,
well, to your point, I do want to mention one last thing, like an example of that, because you keep bringing up all these highly successful people, what they do. A lot of them sports related. I mean, they are talented, but the talent isn't what got them where they were. That's just what got them in the door.
Right. Well, not even maybe. I don't know. Patrick Bet David, right?
Right.
He owns one of the biggest insurance companies, multi-billionaire. He's not a sports person. That's somebody I really admire. I really admired Steve Jobs. I really admired I like Dave Ramsey a lot too, because look at what he built from going bankrupt to that.
Let me get what I'm going at too. I'm bringing up one example. I'm from Myrtle Beach, grew up. Joe Moglia, the guy who coached Coastal Carolina, brought them to where they were.
Yes.
Coached them until 2017, I think, when Chadwell took over. Turned them into a dominant football program. Was the CEO of Ameritrade for 15 years.
Right.
Very successful person in his business life. Retired from that, still wanted to do something, decided, hey, I have a passion for football. I want to do that. Coached a team and was extremely successful with that, even with limited experience. I mean, he played college football, but other than that, he was never a coach. but he was extremely successful just because of who he was, because that successful personality transferred over to a completely different field.
Discipline equals freedom.
Right.
Discipline equals freedom. So what ended up happening was what? He was disciplined enough to become a CEO of Ameritrade.
Yes.
Pretty big company.
Massive company.
Then, okay, I'm going to retire multimillionaire. Go coach football for free because that's part of the story. That's true. Go to Coastal, school with limited resources, and turn them into what it is now. Built the building blocks to turn into what it is now.
Right.
Chadwell came in, and now Chadwell's gone, and we'll see what they do.
Help
now,
them transfer to a bigger conference, build a bigger stadium. Like, he helped them with all of that
because he's disciplined.
Yeah.
And when I say discipline is freedom, it doesn't mean that you become disciplined now and all of a sudden you have more time. You have to use that discipline to keep doing what you do every single day.
Yes.
Right? So you know what I've been doing? 5 a.m. 5 a.m. I'm at the gym or I'm doing whatever. It allowed me to have more because I'm done early. Then I have an hour before my family wakes up. So I'm reading because we read here.
Yes.
Like if you want to work here, you're reading a book a month.
We do. Our sales team has a book. Every week we talk about the assigned chapters.
Yep. Assigned chapters. We talk about it. How does it apply? So on and so forth. We're going to be the Navy SEAL. But I have more time now. But that didn't come easily. I still have stuff to do. And what happens with me is when I have more time, then I start packing more stuff in. So then I have to get even more disciplined. And it's just part of the
right.
ever-revolving circle. But, I just...
Well, yeah.
You have to be disciplined, and sometimes you have to put in the extra hours to organize your life through the discipline that you're now practicing. And once you are disciplined, organize your life, and through that discipline, you start practicing it, then... after a month to 2 months to 3 months, you'll start seeing the more time. You know how hard it is going to be for me to sit there, because there's days I'm not disciplined enough. There's days I didn't make enough calls. There's days I didn't get to enough things. There's days I didn't do X, Y, and Z. It's hard to relax when you do that. It's hard to relax. You have to have a sense of accomplishment. I've talked to Donovan about this. When he got this live working, he had a sense of accomplishment. Now then he hit 100 followers on TikTok. And then, there's a sense of accomplishment even with the little things. And the little things start building the big things. But that sense of accomplishment came because he got disciplined, right? I saw him sitting out here for hours working on how do I make the 810 ISO Mini Pro, whatever the hell it's called. There's a million names to it. Work. He got disciplined, and then it worked. And now he's pushing us like, we need more. And I'm pushing us. We need the printer working. The printer works now. We need to have paper here, highlight, be prepared for this show. As we've gotten more disciplined, we've been able to spit the show out faster with more clips, with more stuff, with this and with that. Right. So the discipline is going to cut down on the time it takes us just to produce this. So guess what? Now we have more time to do the other thing. The discipline helped us build the processes. So now we have more time to do this.
And payoffs grow exponentially.
Exponentially. It's the compound effect.
Yes.
Read the book if you haven't. With that being said, if you haven't done it yet, go ahead, bang that red subscribe button to subscribe to this channel. Turn on your notifications. If you're watching on Facebook, hop over to our YouTube. Follow us on YouTube. Bang the red subscribe button. Follow us here too. Go to NBI Financial Group on Facebook, NBI Financial Group on YouTube, Twitter, LinkedIn, Instagram, Rumble, all of it. Go to NBI Financial Group. We are on all of them. Follow our channels. Turn on notifications. If you go to YouTube, subscribe, turn on your notifications. Leave a comment on what your thoughts are on this video with your Instagram handle. You have a shot to win a $100 Amazon gift card that we will be giving away on St. Paddy's Day. Now, back to our regularly scheduled program. Benny, let's talk about mortgage and real estate.
Let's get into the employment numbers that came out earlier this week.
These were interesting.
These were very interesting.
So these were the ADP or the CPI?
No, these are the CPI.
CPI, Consumer Pricing Index.
Yep.
Hit me. What's the mortgage numbers?
Total non-farm payroll rose by 517,000.
Oh, so jobs went up.
In January. Jobs went up in January.
Huh. What do you think?
By 517,000. That is a large number.
Did you break those numbers out?
Yes, I did. So leisure and hospitality was at 125,000, which was the leading. But that's still a smaller portion of that 517. I'm not too surprised it went up. But the fact of how little of that was from the hospitality and like bar and service industry is surprising to me. That how much growth is from personal and business service sector and then education and health service sector and government as well. those combined for 350,000 between those three sectors.
Say that again.
Between personal and business services grew by 80,000. Government grew by roughly 75,000. And then private education and health services grew by about 112,000.
Interesting.
That's really interesting. Like I can't really figure out. I don't understand where that's coming from, especially the professional and business services. Us being in the mortgage industry are seeing people constantly looking for jobs, trying to find jobs, getting laid off. I mean, I don't even know if you saw yesterday, like Disney just said that they're laying off another 7,000 people because they're automating a lot of things that like with their streaming service. We had the Amazon layoffs. We had Wells Fargo laid people off. Like people are being mass laid off. We're seeing left and right, yet the job numbers are going up, and it does not make sense to me. And it's surprising everyone. That's why we saw a change in the rates, because they're saying, well, if the job numbers are going to be like this, it might be a little longer before the Fed starts to bring rates back down.
I think that the Fed is going to start bringing rates back down because they've kind of said it, like inflation's coming down. I think inflation is going to continue to come down. Mm-hmm. There's something going on with the job numbers that isn't correct.
I've been saying this. It does not make sense to me.
The numbers are wrong.
And it goes against every expert out there's predictions, thoughts. No one understands. I think they're wrong too. I think we're going to see a correction.
There was a correction.
Has to be.
So there was a correction last month, which is why we saw that big.
There was, and it went down by about half of what, because it went up. They said a 216. It was like 96.
So part of the issue
month.
I think that they're having is there's a lot of part-time jobs, and they're considering that. I think you have to look at hours worked as well.
Yes.
Are the hours worked going up or down?
We don't have the hours worked, at least not yet.
We need the hours worked, right? And then we can kind of look into that. And then the other piece is if there's like remote positions and things of that cross over state lines, those get double added. So we need to pull these numbers apart. We need a little bit more time, but the mortgage industry is reacting a little bit.
It is.
The interest rates have gone up a little bit.
Right. Yes, they have. I mean, this is the first time since middle of December or early December that they've gone up.
Yeah, they're going to come back.
They will. It's only a matter of time, and the reason they even went up is just because I think it might be a little longer. Everyone knows they're coming back down at some point within the next.
We've reached peak inflation.
Right.
Inflation is going to continue to come down. The May 10th numbers are going to be a big deal.
Right, and inflation numbers did come back down. So I mean, they are still.
Well, and then Jerome Powell said that he thinks we're at the end of. He can see the end of the light at the end of the tunnel.
He did. Then he followed that up by, but we're still going to raise it up another quarter.
Next month.
This was last.
That was last time. This was a new report that they kind of can see like, oh yeah, well it's done. Now, I mean the jobs numbers are weird. Because if you look at manufacturing and like the New York published manufacturing number and all this other New York manufacturing numbers, things that like you look at those numbers and they're recession numbers. Yeah. You look at what's going on in the market, it's recession. You look at the amount of layoffs, it's recession. Are we going to hit a recession? They came out and said, "Oh, I think we could. I think we might avoid a recession on this one." They have. They just recently came out. I have to read the whole article, but that was the headline. The Fed thinks that we can possibly avoid a recession. I think we're in a recession.
We've been in a recession.
They don't. So, the question for everybody is, are we in a recession? I sure think so. I think a lot of other people think so. Ben, do you think so?
Yes.
A lot of the major players, economists and stuff, they think that we're in a recession, but the Fed is saying that, hey, we could possibly avoid a recession. When's the election, 2023 or 2024?
I don't know.
Huh, I don't either. I'm just trying to figure out like why we're getting so many mixed signals. I think that's the theme of 2023 so far is mixed signals.
Yeah, I mean it is, especially with this job report. I mean, like we were saying last time, it was $96,000 after the correction, and then 95,000 of that was from hospitality, which makes sense. Service industry, people out there who lost their jobs are trying to find something to pay the bills.
Agreed.
So they're finding part-time jobs that are less wages than what they believe they deserve.
Right.
That isn't fixing the issue. That's just a byproduct of the issue. This one does not make as much sense. I mean, government spending. I mean, they're still spending. That's not surprising, but the professional and business services just makes zero sense to me of why that's gone up. It has
to be wrong. I mean, there's so many people who are getting laid off.
Unless there's some trend now that a lot of people are finding people part-time.
1099 maybe.
Right.
Yeah, no, I don't get it. I don't understand it. Interest rates are up, but it's still a good time to buy a home. I believe it's still a good time to get in real estate. I think for first-time home buyers, for investors, this is a perfect time. I just bought another investment property.
Yeah.
So
it definitely is a great time to get in.
We bought 2 this year. So, 2 in the last 12 months. It's a great time to get in. It's a great time to build wealth through real estate. It's a great time to have a comprehensive real estate plan. For all my folks out there who I constantly get harassed on TikTok and stuff about, I'm preaching a message that a majority of Americans don't want to hear. The message that I'm preaching is you have to have discipline, you have to have plans, you have to have a goal. If you do not have plans, if you do not have disciplines, and if you do not have goals, you'll never get to where you want to go, right? So I'm saying, hey, we need to purchase. We need to purchase a primary residence first, and then if you want to build real wealth through real estate, you need to have a plan in place, a comprehensive real estate plan. So the message I keep getting pushed back on is 2008, and it's just misinformed people, and some of them might even be bots. And if they aren't bots, like, hey, people, you're acting like a bot, because what you're doing is you're saying a bunch of stuff that is not relevant to what's actually going on. I can show you miles and miles and miles and miles of core logic data showing you this is not 2008. This is not 2008. We will do well in real estate, and we'll continue to do well. And even in 2008, guess what? If something bad was to happen, right, like it did in 2008, by 2012, the homes that went down in value were now worth more than they were 2008. So,
right. You know what's probably riskier than real estate?
401k.
Yeah.
Yeah, it is. Especially
that's backed by securities. And guess what you're doing every month that's withdrawn from your paycheck? You're putting that into 401ks. That is still a risk. That can still go down. Look at the last year. It has gone down for the majority of people. And then compare that to buying homes. Housing prices are still going up. They're going to go up even more so once rates come back down, which we'll see when, but it's going to happen sometime sooner than later. So what's the difference? I mean, like you said, and so this is something I mentioned a couple episodes ago about, like, 3 out of 5 Americans don't have any sort of budget. You need a financial plan. You need that retirement account. You need that plan in place. And it can be $400 or $500 a month. It doesn't have to be anything crazy. It depends on your budget, how you are. But that's something that we are passionate about, is putting that plan together, working with our clients based off of their experience to move them towards that goal.
Right. 100%. And here's the deal. 3 out of 5 Americans don't have a budget. That's stupid.
Yep.
3 out of 5 Americans don't have a budget. That's really stupid. 3 out of 5 Americans don't have a budget. I'm going to say it one more time. That's dumb. You have no idea where your money's going. And I got some criticism about my restaurant comment. Like I said, a family of 4 goes out to eat once a week. People are arguing back, oh, he grew up in rich society, da, da, da. I grew up in Amsterdam, New York. There's nothing rich about it. It's a working class people. There's a lot of lower class people, or lower income people, not lower class, lower income people in Amsterdam, New York. It was one of the highest welfare counties in all of the country, Montgomery County. When I was growing up, a lot of factories left. A lot of people don't have jobs. There's a lot of hopelessness and negativity that comes from that, right? So, no, I didn't grow up, but I watch people and I watch their habits, and we look at bank statements every day, and I would challenge every single person who says, hey, Nick, people don't go out to eat 4 times a month. The average American's not going out to eat 4 times a month. I would say, okay, well, they're spending money on something. And shout out to the person who said that they quit going to buy a pack of cigarettes and gas station snacks every day before work, and they saved $1,200 a month.
Wow.
$1,200 a month. That was on TikTok. Shout out to that person. Thank you for your comment. It was absolutely awesome. But I challenge every person who's watching this, and if you disagree with me, I will bring you on this show live, and I swear I will do this. Print out your bank statement and show me where you're not wasting money, or where you can't budget in a little extra savings to eventually buy either a primary residence, if you have a primary residence, to buy an investment property so that you can start building generational wealth to you and your family. Because, listen, it's the best thing to do. I'm not saying it's for everybody, but it's the best thing to do to build wealth in America. And if you zoom out, it's gone up over time, right? And I would much rather own property with the amount of debt our country is amassing than I would have it in stock markets. And
you,
I just,
well, you said it yourself too. Even think 2008, Like how quickly were values back up?
Like that. And here's the other piece, Ben. We're not telling you not to invest in 401k because I think you need to be diversified.
Exactly.
But we're not financial advisors. We're mortgage advisors. And this show is meant for entertainment. But at the same time, like you can actually take some advice from this and like apply it to your life and go and do your own research and do your thing.
Correct. Because guess what? Your mortgage advisor is not saying go out and buy investment because they don't get commission on that. So they're not out there saying, including that in what you should invest in. We're saying, hey, consider this as part of your options for your retirement, for your future, for your family.
We care about you as a person.
We do. And I mean, so exactly like he just said, we're telling you have the 401k as well, diversify because, and they'll tell you to diversify. They just won't specifically say real estate because they don't get paid on it.
No, they won't. And yeah, you gotta interview everybody you're working with, and figure out who you can trust and who you can't.
Yeah.
So, Ben.
All right. Last topic wanted to talk about
Before,
just want to say, hit that red subscribe button, mash the like button, hit that notification bell so you get notified to all current mortgage news and thoughts with us here at the Loan Guys podcast. And make sure you follow us on all social media. That's Facebook, Instagram, TikTok, Rumble, YouTube. What am I forgetting? Twitter. Yep. It's NBI Financial Group. And you can follow me personally. I am Big Boss Ben, and this is, are you the czar? What are you nowadays?
Mortgage Mobster.
We'll see what he is next week. But
Mortgage Mobster. No, I was saying that. And Donovan's going to, we'll get Donovan and Zach to work together to put our personal handles up on the screen because anytime we have a guest, I want their personal handles up as well. You got it already?
Yeah. Look at him.
That's called being proactive. That's going the extra mile for your job. That's called wanting to be the best.
That's
Shout
right.
out Donovan. So.
That's right. All right. So the last topic I wanted to talk about is and this is part of Ben's Den as well.
Ben's Den. I forgot we got Ben's Den. Hit him, Benny.
The new LLPAs came out. And if you do not know what that is, it's loan level pricing adjustments. So as a mortgage professional, one of the worst questions that I do not want to hear are what's interest rates at nowadays? Because it depends on so many factors, and LLPAs, loan level pricing adjustments, is the reason why. And that's why if you ask us that, we'll just say it depends. We will not give you a quote just because of
we don't know.
Yeah, until we actually take a full application. That's part of the advantage that we have in doing as much as we do up front is because we have all the information to be as accurate as possible. And what these adjustments are is you'll get a different, it affects your rate, the cost of your rate, depending on how much you put down. Now, as of a couple of days ago, it's releasing in terms of your debt to income ratio. So how much income you have is now going to affect your interest rate, which no other person is going to know up front like we will. So they have recently changed how those are adjusted, and it's really interesting how they're doing. And I mentioned before that there's changes to try to increase first-time home buyers. What they are doing is there's a lot more benefit now to lower credit scores and to higher LTVs, meaning loan to value. So if you're putting less down, you are going to get a better rate than if you put more down, which is a really weird. What are your thoughts on that? So if you put 5% down, for example, you get in this coin, you get 1.25 adjustment cost, right? So you get 1.125 cost for that. If you put 20% down, you get 1.5% adjustment cost added to it.
So for the better.
No, worse. You're getting worse pricing the more you put down.
I mean, I think
until you hit 70%.
I think that's rewarding bad behavior.
It's trying to increase it because now they're offsetting it. They're raising the lower where you're going to see the payoffs is they're raising lower credit score criteria. So meaning, for example, comparing the two together, you have a 95% LTV. So you're putting 5% down with a 660 credit score. You are getting 1%, 1 point better in pricing than the previous LLPAs. Meanwhile, if you have a 759 credit score at 80% LTV, you're getting 3/4 worse pricing.
I think that is kind of wild.
Yes.
I mean, listen, I haven't looked too deep into them, but you sitting here telling me that you're
It's insane.
incentivized to not put as much money down. Like the number one thing that you don't want to do is you don't want to be over leveraged.
Right.
So if you can put 5% down to own a home, that's better than renting, right?
Right.
But you shouldn't be incentivized to only put 5% down because of a pricing adjustment.
Right.
Compared to 20% down.
Now,
because if you can afford to put 20% down, you're in a better position financially.
Exactly. Now you're probably going to have a slightly lower payment because of the loan amount change, but at the same time, you're being penalized for putting more down.
Crazy.
It does not make any sense to me. Look, I am extremely passionate about first-time home buyers. Like that is something that that's part of why I do what we do. There's a lot of great products and tools out there to first-time home buyers that we want to make sure that they are aware of and know and understand. But and this benefits them, but I don't see it being successful. First off, because if they do, they need to change that AUS as well. I'm looking at it here. So there's a 1.75% adjustment for 3% down with a less than 640 credit score. These are conventional LLPAs. Who in the right mind is going to get a approved AUS findings at that?
Nobody.
Like if you know anything about the origination side, no one's going to get approved of that. So where is that money going?
I don't know.
So I appreciate what they're trying to do here. I just think they're going about it the wrong way because I don't think that they're actually going to see the benefits and be able to do it. Because I mean, you still have FHA as a program too, which have great rates. Even if there's mortgage insurance, if you're putting 3.5% down, I mean, you're not going to get rid of mortgage insurance anytime soon.
No.
So what is the benefit of going conventional and getting better pricing on conventional? Because it's not going to beat FHA.
Yeah, there isn't a benefit.
So everyone's saying, people are calling this like the Robin Hood adjustment because, it's going to charge a little more to people who can afford to put more down to have better credit, but it's going to benefit the lower qualified clients who can't afford to put as much down.
It's rewarding bad behavior and you're setting yourself, it rewards bad behavior and you set yourself up for an issue in housing.
Yeah.
Not today, not tomorrow, 3-5 years from now.
Yeah.
Because if you're rewarding bad behavior, then less qualified borrowers are buying homes, right? And if a less qualified borrower is buying homes, they probably have a higher foreclosure rate, a higher 30-day late rate, higher 60-day, 90-day pre-foreclosure, that type of thing, higher bankruptcy rate. Am I wrong?
You're not wrong.
So now you're saying, okay, well, I'm going to reward you, the person who wasn't disciplined enough to go out and keep your credit score high. And I was one of those people, hand up. So I'm not criticizing y'all. I've been there. But I had to get my act together. You're rewarding that behavior. You're rewarding somebody who isn't putting as much money down. Now, do I still think they need the programs? Yes. But I don't think that you should be rewarding them more so than a person who puts 20% down. If you're going to do the loan level pricing adjustments for somebody with lower credit score, lower down payment, you need to adjust the ones for the higher credit score, higher down payment as well, and reward the fact that you want to do this. This makes more sense because now what's going to happen, the people who are smart enough to see these loan level pricing adjustments will put a less of a down payment. What do you think I'm going to tell my clients? Like if they can get better pricing with less of a down payment, what do you think I'm going to say to them?
Yeah.
Do it. The pricing is better because it affects your monthly payment.
Absolutely.
So it just depends. We'll have to outweigh.
How is this going to affect like recast abilities and things like that? Because what's to stop? Like, why would you not put 5% down
and then do 15%
and then just make a payment within a month or two and then recast?
It's typically you have to wait 6 months, but even then it might make sense.
It probably would. I mean, when you're talking about going from, it's insane. You're talking about potentially half a point difference in pricing,
right?
From 95% to 80%. Like it's wild.
It absolutely is wild. And it's one of those things. Like, what are you going to do? There's not much you can do. You just have to watch it fail because that's what's going to happen. It's going to cause an issue. Now, is it going to be a housing collapse? I don't think so, but it is going to cause an issue.
Yeah, it will. And I don't see it balancing out either. I mean, I think it's going to cost the people who are going to benefit the secondary markets on that because they're going to charge more for where you're going to get more still in conventional financing.
For sure.
And you got to consider FHA as well. Because that product is available. That's there. It is a great product for first-time home buyers. It gets a bad rap a lot of times. There's a great use for that.
Right.
I mean, there really is. And I mean, especially with the LLPAs and everything, because for example, we had a client recently, who was a great client, greatly qualified client, 790 credit score, plenty of assets, was putting a large down payment, decided to go with an FHA loan for his family because he wanted his wife on there, who didn't have the best credit. And with the adjustments, it was terrible for a conventional loan. But for an FHA loan, it was really no difference in pricing.
So what would your advice be?
I mean, we presented him with the options.
Yeah.
We showed him the options without his wife on there. We showed him with her on there as conventional and with FHA. He wanted to go FHA.
Well, good.
Absolutely. So he has that ability to do that. That's what I'm saying. It has a negative stipulation because the mortgage insurance and from the realtor side, I understand with the housing and the appraisal piece, because there's more criteria there.
They get nervous.
They do, but
they don't like FHA, and they're less likely to accept an FHA offer.
Right.
So with that being said, though, here's the deal. You know what the benefit of working with a mortgage broker is?
We give you all options.
We gave you all options, and you got to make the decision that was best for yourself. So you wanted your wife on the mortgage. Absolutely. I get it. Right. And you saw, okay, well, conventional, it's going to kill me to have her on the mortgage. But with FHA, that's doable. I would much rather do that, and we're on this together. We're a team, sweetheart. Look at us.
Right.
You know what I'm saying?
We got him a great interest rate. His payment was what? Probably about the same? It was, I think, slightly lower. Roughly the same as conventional with just him on it.
Right.
And the difference was mortgage insurance, which, I mean, would fall off. He probably save a little, but he made the decision of, hey, I want my wife on there. And then once the time comes and they have the 20% equity, then they can refinance as conventional if that's what he chooses.
Right.
So we're letting him know his options, and he was picking what he thought is best for his family.
And good for him.
Right.
Good for him. Do what's best for you and your family, but at least be willing to listen to the numbers and to listen to options. We aren't going to sit here and force you into it. Ben, I got a meeting.
All right.
This podcast has gone long.
It's gone way too long.
You talked a long time.
Well,
you talked a lot. Great podcast.
There was a lot to talk about. You crushed it.
You carried us today. I really appreciate that. Donovan, thank you for being our example on every example we had. We might have to get some extra people to sit in this room just so we can use other people as examples.
We do. Donovan, yes. We need to make sure we get you a mic, though.
We have one. It's over here, and then we have another one I got to get in the studio. So, but that's all I got for you. If you watched this today and you watched it live, and I know that there's some comments, thank you for watching. We are NBI Financial Group. We're the best mortgage brokers. We're the best mortgage people in North and South Carolina. That's where we're licensed. We would love to do business for you. First-time home buyers, we're coming. We got a bunch of UWM just rolled out new construction. We have multiple ground-up construction people. We are going for first-time home buyers, ground-up construction investors. We want you to work with us because our interest rates are better, our costs are better, and we get things done quicker. Thank you for watching this, everybody who commented. If you haven't done it, go follow us on all our social media. We're NBI Financial on everything. If you're on a social media platform, do that. Bang the red subscribe button. Turn on the notifications. Leave a comment of what you thought with your Instagram handle, and you have a chance to win a $100 gift card. We're trying to bring back those Amazon employees that Amazon let go of. And make sure you follow him at
Big Boss Ben.
And I'm Mortgage Mobster, and it's on the screen. We appreciate you guys. Thank you for joining us. Salute.